Joining us now for more on the markets and jobs, Joe Amato, President and CIO at Neuberger Berman. Joe, great to have you with us.
Good to be here. Thank you.
It's interesting to get the jobs report now after the Fed decision. How important is this for you?
I think the data is really important. I think the state of the labor market is one of the critical issues in terms of determining what the Fed path is going to be. And, our sense is you're going to continue to see a grinding, weaker labor market, and that, I think, leads the Fed to be more dovish, possibly, than the market's even expecting right now.
How do you think about the Fed in 2026 and the impact on equities, but in particular on rates? And I'm wondering because even if we get a new Fed chair, that doesn't happen until after May. There's a confirmation process. It seems like everything is very back-end loaded. And for somebody to believe that there are a lot of cuts in store, they have to happen in succession the second half of the year.
Right now, our base case is you're going to see one more rate cut. The market's right now pricing in 2+. Yeah.
Okay.
Now, we think growth's going to hold up better and inflation's going to come in better. So, that's going to lead the Fed to be accommodative, but, we're going to watch the pathway here based on what the short-term data shows. We think the short end's going to come down, the long end's going to stay reasonably stable. I think you've got the return to the carry trade to a degree, which will keep the long end stable. So we think fixed income is going to be somewhat more boring next year than you saw over the course of the last year.
So even with central banks around the world raising rates, like the BOJ is going to be meeting, and they'll be that's not going to be pulling up our long end.
I do think you've got a divergence of monetary policy for sure, whether it's Australia, Japan, but at the same time, I think you've got accommodative policy in China, and I think you'll have accommodative policy in the U.S. But I think that's, where we're at right now is this tug of war between what's the state of economic growth, labor market, and what's going on with inflation. That's why you saw last week with the Fed votes, you had a pretty big divergence. You had some people not wanting to reduce rates, others wanting to reduce rates a lot. And I think that's where we're at this rate, and that's why the data is so important, what we're seeing right now and what we'll see in the coming months.
So how does this set up for 2026 in terms of the equity picture?
I think the equity picture is constructive. I think we expect an increase in nominal growth in 26, which should continue to help boost earnings, which have been strong over the last couple of quarters. So you've got the reduction in rates that have occurred over the course of the past period of time. It's not just the recent rate reductions. You've got fiscal stimulus, which is very much front-loaded in the first half of 26, purposely so, right, in the context of the political environment that we're seeing. And you've got deregulation, which has been kind of bubbling in the background that we think is going to be helpful in boosting confidence.
So the fiscal stimulus is, what are the main things? I mean, is it the tax refunds? It's R&D expensing?
I think it's incentives for CapEx. Certainly on the consumer side, you've got some level of tax rebates that you're going to see, which is always helpful to the consumer. But I think the more sustainable issue is incenting companies to invest more aggressively in CapEx.
Okay. And I have to ask you about the Fed chair. Does it matter in your view? Does it matter to the Fed's credibility? Does it matter to what the long end does in terms of rates? How do you view this? I think
it matters a lot. The Fed chair is an important determinant of the pathway, and having a credible, independent view from the Fed is critical to keeping the bond market stable. Right, our expectation here is the bond markets are going to be stable. If you see the credibility lost for some reason and the long end of the curve gets unanchored, then I think all bets are off.
Are any of the candidates, do they concern you?
I think all the candidates are very credible. I mean, we know each of them reasonably well. And I don't think the Fed independence is something that is like a light switch on and off. I think it will either grow over time or not. And I think the leadership of the new Fed chair is going to be an important determinant of that.
Joe, great to see you. Thank you.
Thanks for having me.